Okay, good evening. I call this meeting to order at 6:46 and confirm all members are present. To start the meeting, the deputy clerk will now read the township land acknowledgement.
Township Land Acknowledgement. The Township of Adjala-Tosorontio is situated on the lands within Treaty 18, being the traditional territory of the Anishinaabe people, including the Ojibwe, Odawa, and Potawatomi nations, collectively known as the Three Fires Confederacy. This land is home to many diverse First Nations, Inuit, and Métis people. We acknowledge Indigenous peoples as stewards of the land, and we honor their resilience as well as their culture and our shared respect for the lands, plants, animals, and waterways which sustain us all. We recognize the injustices against Indigenous peoples and are mindful that the decisions of government impact our shared land and all the inhabitants. We commit to reconciliation as a journey, foster Indigenous cultural awareness and educational opportunities, establish respectful and healthy relations with Indigenous peoples, continue to steward the land and its inhabitants, and cultivate an inclusive community for all.
Thank you. Next item of business is the adoption of the agenda. The recommendation reads that the agenda for the audit committee meeting held on Monday, August 11th, 2025 be adopted as presented. Can I get a mover? Councillor Borzos, seconder. Councillor Meadows. Any questions? All in favor? And that is carried. Item 3, we have the disclosure of pecuniary interest. The next item on the agenda is disclosure of pecuniary interest. Are there any disclosures of pecuniary interest at this time? Seeing none. Moving on to item 4, the adoption of minutes. The recommendation reads that the minutes of the audit committee meeting held on Tuesday, July 16th, 2024 be adopted as presented. Can I get a mover? Councillor Meadows, seconder, Councillor Borzos. Any questions on that? Seeing none, all in favor? And that is carried. Item 5, reports and correspondence. The recommendation reads that the correspondence from Sue Bragg, Baker Tilly, SGB LLP, dated November 19th, 2024, regarding the interim audit of December 31st, 2024 financial statements be received. Can I get a mover? Councillor Meadows, seconder. Councillor Borzos. Any questions on that? All in favor? And that's carried. Moving on to item 6.2. The recommendation reads that the draft audited financial statements for the year 2024 be received, and that the audit committee recommends that council approve the draft audited statements for the year 2024. I guess, am I doing that too early? We should be doing the report.
Through to the chair, to the committee, you can place it on the floor and then have discussion about the audited financial statements afterwards.
So can I get a mover for that? Councillor Meadows. Seconder, Councillor Borzos. And do we have any questions? We will have Sue Bragg do the report or presentation. Perfect. Sue, if you have comments or any sort of presentation information for us, that'd be great.
Well, I did have some highlights that I was going to provide to the group, and certainly would love to entertain questions. I assume you all spent this beautiful hot weekend in the air conditioning reviewing the draft financial statements because you didn't want to go outside. But
of course,
Councillor Meadows is shaking his head.
Bob doesn't have air conditioning. So.
Oh, that's why you're shaking your head. Okay.
Sweat it out.
You didn't spend the weekend looking at it.
It was just yeah, a little hot.
Yes, for sure. Okay, well, if you don't mind, I'll take a few moments to provide my sort of high level comments, and then we can entertain questions.
Perfect.
So I trust you all have a copy of the draft financial statements in front of you. And so the first thing I wanted to mention is that the proposed date of the final financial statements is September 10th. That's the date that the drafts will go to council, and they will remain drafts until a quorum of council approves them. On the statement of financial position, if you could flip to that page, it's page 4 in the bottom corner of our statement. Just a couple of comments on some of the large variances. So you can see there, cash and cash equivalents, investments, very similar to last year. Accounts receivable, though, were up quite significantly, and there were a couple of reasons for that. Water receivables were up about 285,000. We also had an HST receivable from the government of about $194,000 more than it was at this time at the end of December last year. And then, of course, the allowance for accounts receivable, which previously had been, a fair size figure related to Evergreen, is now completely gone and resolved during 2024. So that was great. Taxes receivable are also up, and this is something that we're seeing across all of our municipal clients. It's obviously partly due to, tax rates being up, assessments being up, but we're also seeing, the beginning of the economy, and people are certainly appear to be choosing to pay their taxes down the list, not first on the list. So one of the things I'll talk about when I come to council is the ratio of taxes receivable to the total levy. That's one of the ratios that we always look at. And Adjala-Tos is tracking at about 11.4%, up from 8.8% last year. The provincial average is about 8.1, and the province considers anything in the area of 10% to be low risk. So, you're a little bit above what they consider to be low risk. So I don't think, I don't think we should be sounding major alarm bells at this point, but just something for you to be aware of. And I think the economy is also bearing on the fact that the water receivables are up as well. So just something for council to be aware of. In terms of liabilities, you'll also have noted that accounts payable and accruals were up significantly from last year. Last year, they were about 1.2 million, and this year they were just over 2 million. Holdbacks, amounts owing to tribute related to water, and then there was an accounts payable run done at the very end of last year in December 2023 that did not happen this year. So all of those factors led to that amount being up. The asset retirement obligations, you might remember that was a new concept that we had to tackle last year. That was a new policy or rule from the Institute that we had to implement. And that figure has come down about $90,000 over last year. And that's because there was more information brought to light related to the Loretto Fire Hall. And so we were able to reduce that asset retirement obligation accordingly. The other figures that you see under liabilities there are pretty similar to last year. Under long-term debt, you can see it came down about $400,000. That was just related to normal repayments. And even the obligatory reserves were pretty similar year over year at 10.7 million. Under non-financial assets, tangible capital assets were up significantly. There was about $4.3 million of additions in 2024. And just to remind you of what some of those projects are, because I know you're deep into your 2025 projects now, but there was about 1.9 million spent on roads, about 800,000 on bridges, some water and sewer upgrades of about 900,000, and then a new plow truck and fire tanker for about 1 million. So lots of action there. The next page is the statement of operations. And again, just a couple of high level comments here. One, I will bring back to our discussion on taxes receivable. So, you know, the silver lining of taxes receivable being higher is that there is higher penalties and interest related to taxes. And so on the very last line under revenues there, you see other, 1.6 million compared to $1.2 million budget. 186,000 of that is principal and interest, or penalties and interest related to taxes. User fees and service charges are up. Both the water user fees and planning permits were up year over year. And then under the government grants, you know, that can be a tough area to budget. But there were some funds from the Canada Community Building Fund. I still think of it as the gas tax money that we did bring into income this year for some of those roads and bridge projects. In terms of expenses, one thing to keep in mind is that the budget column does not include amortization, but the actual 2024 and actual 2023 do. And so for both 2024 and 2023, amortization was about $2 million. You know, so don't be alarmed that, you know, your actual is 15 million and budget was 14.6, because if you take out the 2 million of amortization, it actually means your actual expenses were about 13 million before amortization, which is, you know, $0.6 million less than what was budgeted. Now just a couple of notes that I wanted to bring to your attention. Actually, maybe we'll just pause briefly on the statement of remeasurement gains and losses. So that should be a couple pages along, page 8 in the bottom corner. So again, similar to the asset retirement obligations, the statement of remeasurement gains and losses was new in 2023. And so this basically captures the unrealized losses related to the investments year over year. The municipality is invested in bonds, and of course their fair market value is always lower than their realizable value as the bond term stretches on. And so you can see there that there's about $69,000 of unrealized losses. But as disclosed in the note, you know, we don't expect that there's going to be losses, but the accounting rules require that we show those investments at fair market value. In terms of notes to the financial statements, just a couple that I want to highlight for you. Note 2 on cash and cash equivalents. So you had about $15.6 million of cash at the end of December 2024. And about $10.7 million of that is restricted, and that figure equals the obligatory reserve funds. So things like, you know, development charges, the building stabilization fund, unspent gas tax monies, and so on. So important to note how much, you know, that such a large chunk of that cash figure is restricted for those specific purposes. Under contingencies, note 8, we've disclosed the fact that there is a provision provided for in the accounts of about $120,000 for an ongoing claim. Then the other one I wanted to bring to your attention is note 16, accumulated surplus. It's on page 20 of the financial statements at the very top. And so it discloses the fact that of the, you know, almost $59 million in accumulated surplus at the end of the year, almost 52 million of that is invested in tangible capital assets. There's about $5.2 million set aside for reserves. And then there are general area taxation and a couple of unfunded liabilities that net to $1.8 million there. And then last but not least, note 21, which is on page 21 actually. And this discloses a restatement. So the building stabilization fund had been sitting under reserves previously, and it has now been moved to obligatory reserve funds. This is something that Brent and I talked about, I think at the end of last year, and it was something I certainly raised with the prior treasurer as well. And so it's great to see that where it belongs now. And so instead of being part of accumulated surplus, that fund is now part of a BLIGS and actually sits under liabilities on the statement of financial position. I don't want to belabor the notes any further, but important to take note of the schedules at the very end. So Schedule 1 discloses the balances of the various reserves, discretionary reserve funds, and obligatory reserve funds. Schedule 2 is a schedule of tangible capital assets, which breaks down between, how much is land, how much is equipment, how much is roads, under the various categories. Schedule 3 breaks down the tangible capital assets by department. So how much of the capital assets relate to general government versus environmental, transportation services, et cetera. And then Schedule 4, the very last page in the draft financial statements, shows the schedule of segmented revenues and expenses. So it breaks down the figures that you saw on the statement of operations by department. So that was all, those were sort of the high level comments I wanted to discuss with the audit committee. Certainly when I do the council presentation in September, I will be focusing more on the PowerPoint presentation, but wanted to, spend a little bit more time with the audit committee, and would love to entertain any questions you may have, unless the treasurer maybe has anything to add.
Thank you, Sue. Brett, would you like to add anything, or?
No, I have nothing to add, but I just want to thank Sue and her staff for the help with the audit. I greatly appreciate it. You're excellent to work with.
I got a question from Councillor Meadows.
Yeah, just with the breakdown of the reserves, I'm just curious, are they actual reserves, or are they any of that money, is it outstanding projects that still aren't finished yet? The 5 million that we have in reserves, are they like projects that are still outstanding? Is there some of them that are still outstanding projects from?
Through the chair to Councillor Meadows. So what you see in the financial statements are the actual balances at the end of the year. So not included in here. If there are projects that are still ongoing, and there may be additional, so there would be what I'll say commitments against those reserves. So that might not be the final balance for any projects that are carried over, let's say from 2024. There would be some projects that carried over into 2024. They weren't complete yet, so there could be additional funds
So
from
they could still be part of that's still part of that $5 million that we have under the
there's
reserve.
commitments against those.
Yeah, there's commitments against them. That's what I mean. Like, but it's still, it shows as a reserve, but it's not really. It's commitments against certain projects in amongst our reserve capacity.
Correct.
So is there any way of breaking that down to what our actual reserves are?
Those are the actual balances. I can offline, I could give you a report to say, here's our reserve balances at the end of the year, and here's all the outstanding commitments against the reserve and the reserve funds, and then you could see what the projected balance is for those reserves.
Okay. And
Could we bring those to council?
Yeah, yeah,
November 10th meeting to have a better idea of where the reserves stand, whether they're committed or just actual savings, whatever you want to call it.
Yeah, we certainly we could bring just an update to council.
Yeah.
that would be a nice view for council to see what we actually have outstanding. So supplemental as well. With regards to the working fund, how much money do we have in the working fund?
At the end of 2024, there was 1,357,000.
So that was the working fund reserve? Okay, and does it show where the money, like when you did your audit, did it show where that money, how much of that money came out of the operational budget?
So there was about 1.6 million that came out of operations. And then that was countered with about 494,000 that was sent back to operations and about 244,000 that was spent on capital.
So from the working fund, how much of the working fund went into the water and wastewater account?
I don't know that offhand. Brent, do you? I can call up the.
Through the chair
schedule.
to Councilor Meadows. Yeah. So the funds coming out of the working fund, the majority of the money that was coming out of the working fund in 2024 would have been to pay for the shortfall in water and wastewater. I don't have the exact number out, but I would say it's around 300,000.
300,000?
Keep in mind that some of the money that came out of the working fund in 2024 was also to pay for some capital projects.
Yeah, and I had a question with regards to some of those capital projects through the chair. I was kind of concerned when I was looking over some of the wastewater things that were going on. Like, I'm just curious on why we're paying for a lot of this stuff. Like, I'm just looking at we've had fires over there and stuff, and I'm just wondering why we're not recouping as much as we can out of them. I believe it takes, it was $9,000 we have to pay to New Tech for their ladder truck. I believe that's what the amount was.
I truly don't recall.
I believe that's what the number. So they were out, I think the ladder truck was out there 3 times. And I'm just wondering how we're going to recoup that money off of tribute.
Through the chair to you, Councilor Mouse. So we did recover for the fires.
From tribute?
From tribute.
We did. Okay. Do you know where that would have been in the?
That would have been revenue that would have been received by within the fire department as a recovery, and those funds and those additional funds that we received from tribute actually went into the fire reserve.
It did go. Went right back into the fire reserve.
So that can be used for future capital projects for fire. So we did recover from tribute related to those fires, and that is it's a recovery, a revenue, and that revenue was in turn transferred to the fire reserve. So
could you possibly get me the numbers for that as well, please?
Absolutely.
Thank you.
Williams?
Through the chair, I'm just trying and hoping to get some better understanding and a little more clarity on this 11.4% increase in taxes or tax revenue, or I guess, I don't know if it's tax revenue or tax receivables.
The 11.4% that I referred to is the percentage of taxes receivable in relation to the tax levy.
Mm-hmm. Okay.
So it's not that taxes have gone up that much, but the receivables at December 31st, 2024, as a percentage of the total 2024 levy is up to 11.4%. Just think of that page in my notes here. So like in the last 5 years, the highest that Adjala-Tos has been on that was 10.4% back in 2021. And the provincial average last year in 2023 was 8.1%. If we average all of the surrounding municipalities that we're involved with, they come in just under 10%. So that's the 11.4 I'm talking about. That's the taxes that have been unpaid at the end of the year compared to the levy.
That's because of hard times, is it? Or
Partly because tax rates were up, assessments were up. So naturally you'd expect that number to increase. But I think that the largest chunk of that is related to the economy. I don't know if the treasurer can speak to it. I'm sure he's having conversations with taxpayers about payments, and I don't know how many properties he may have going to tax sale. I know that several of our clients who haven't had a tax sale in 2 or 3 years now have quite a list of them that they're planning to do this year.
Thanks, Sue. Just additional comment. No, we have not had any additional properties go to tax sale as of yet. I would also like to keep in mind the receivables are up, and keep in mind, we've also added 600 homes to our tax base. So there's another approximately 600 homes we're taxing for. So the number of properties have increased. It also makes sense from, regardless of the economy, that the receivables would go up if you're adding more taxpayers to the tax base.
Through the chair, I'm just trying to sort of, forgive my ignorance on the topic, but I just need to understand this a little more pragmatically for myself. So if the tax base is going up, tax revenue is going up, that means less or no tax increase in the year coming or the year after, because we can meet our obligations with the current assessments and the current mill rates without increasing taxes. Am I on the right track or absolutely off the beaten path?
Well, you have to understand there's services, many more services being provided, so there's got
Such
to be
as?
some sort of a ratio. Well,
Through
Roads.
the
no
chair, to answer your question, so for the 2025 budget, our assessment base increase, so if I can use percentages, approximately the levy, so how much we needed to obtain through taxes was about 10%, but the actual tax increase for the average resident for on the tax bill was only about 2.5%, and that big difference between the levy increase and the actual tax increase that a typical resident would see is because of growth. So to answer your question, is if we continue to see growth and an increase in assessments, the tax increase should be less.
That's perfectly right. Thank you very much.
Mr. Meadows?
Yeah, I just have one more question with regards to the operational budget. If with the amount that's coming out of the operational budget, I find the 1 million, is it 1 million going into the working fund? Is that correct?
The
I just find that number a little high. Does that mean our departments aren't spending their operational budget? I'm just concerned that we're way off the mark when it comes to doing our operational budgets every year, and that's why we have this huge overage every year. So it's sending off alarm bells to me, anyways. You know, when you got a $1.2 million overage, it is a
Through
lot.
the chair, to Councillor Meadows, so the surplus was large. I'd like to think of it this way. The surplus, it was due to a number of factors. We had salary gapping. We had additional supplemental income, more than we budgeted. That's a good thing. We had higher revenue from tax and penalties. We had a lower benefit cost because of staff turnover. But I would say on at a grand level, if we've collected more, or we had a surplus and that money's gone into the working fund, I would say moving forward, that money could be utilized for other capital projects. So instead of increasing taxes by increasing the transfer to reserves to the infrastructure reserve, to the fire reserve, we've already, think of it this way, collected the funds, and now we don't need to raise taxes for another project. We've already obtained the money through a surplus in the working fund.
Yeah, this is all on huge wage increases to the tune of $640,000, I believe it was, and benefit increases, our insurance increases. These are all operational items that all had increases this year, and yet we're still at a $1.2 million overage on the budget. I still find it a little high. That's all I'm saying. You know, like these are all things I would say we would be a lot less in the operating budgets gain because of all these overages that were done this year. We've had higher employees than what I can remember in a long time. I mean, we've hired a few extra positions as well. So Yeah, there's been, you know, a lot of gains too that we've done this year that I didn't anticipate, but hey, it happens.
I think you have to realize, well, if I can just put my 2 cents in that, we're looking at 2024 too, and those changes have ideally come this year more so possibly when we do this again next year, you're going to possibly see the difference that's with the increase of employees and this and that may change the tune ideally. Anybody else have any further questions?
I would just like to add, in my opinion, as your treasurer, you can never have too much money in your reserves. If there's a bridge that goes and it's 3.5 million, we don't put anywhere close to 3.5 million in our reserves each year.
No,
Not even close.
no.
So if a catastrophic event happens, that's why you have a working fund reserve. So there is no massive increase or deficit in a given year.
We have no further questions. Thank you, Sue, for the presentation or the highlights anyways, and I'm sure we'll see you in a month. Yes, sorry.
Yep, I
thinking
would
we're
like
still in
to attend in person on September 10th.
Awesome.
Wonderful.
Thank you very much for your work.
Okay, take care.
Good night. Take care.
Bye-bye.
All right, if there's no further questions, a mover, a seconder, is everybody in favor? All in favor? That's carried. Now we can move to item 6 was adjournment. Now I declare this meeting adjourned at 7:18 p.m. Thank you, everyone.